Hey guys, what's up? Alec back with the daily stock market, and we have our account up $759 on the day and up $2,700 on the week. So we absolutely been killing it. And then the year, we're still up overall, up 36% in the last year, which some hedge funds even wish they can get 36% in the last trailing 12 months. So I'm really proud about that, really happy about that, and we're going to continue it going. Obviously, our trailing 12 months has been a lot better in the past, with it being up as high as 60% in the trailing 12 months in some of our past videos. And I think it can get back to that 50-60% in the last trailing 12 months. So make sure you hit subscribe if you want to be a part of it on the journey to $100,000 into my Robinhood account, which should happen soon. So now we have Zillow's pulled up. It's down 9% on the day. It's the first one we're going to talk about, but the majority and bulk of this video is going to be about stocks that are reporting earnings this week. So let's pull up an earnings calendar and dive right into it. But we did want to go over Zillow's, down 9% on the week. We ended up actually buying 1 to 2 shares of Zillow's on the dip, and I think this can be a good swing trade back up to around the $100 mark, but also a good long-term hold to $150 or higher. I think in the next 12 months, 12 to 24 months is going to be very fruitful for a stock like Zillow. Now that we talked about Zillow, let's talk about stocks that are reporting earnings this week. We're only going to go up to Wednesday, and then we're going to do another update on Wednesday or Thursday on the remaining stocks. So Monday, we don't have too much going on Monday, so that's a pretty chill day. But Tuesday, before open, we have Johnson & Johnson, P&G, which are both very, very good stocks. And after close is where it gets interesting, because you have the big one, Netflix, reporting earnings on Tuesday after close. So in this video, we're going to dive a little bit deeper into Netflix stock and see if you should be buying before they report earnings or waiting until after they report earnings. Now you also have United reporting earnings, which hopefully they'll dive a little bit and you can get in at a good price for some travel stocks. Wednesday, before open, we have Verizon, which is one of my stocks and one of my heavier stocks, kind of like a money park long-term hold for me. It's also a nice dividend stock, by the way. We have NEE, which is Next Era Energy, which is a great one to be looking into if you're looking for an energy stock. We have the NASDAQ, and then we also have Canadian Pacific reporting. And we also have Anthem. I don't want to skip over Anthem. But after close, we have Tesla reporting earnings too. So we'll dive a little bit deeper into Netflix and Tesla in this video. We also have Sands Las Vegas, which is a very, very beat down stock. So if you're looking for a beat down stock that can bounce back, it's a little bit riskier. Sands Las Vegas might be for you. We also have IBM, and we will finish that off with Discover, which is a really great credit card company, by the way. Now, to dive a little bit deeper into Netflix and see what's going on, and let me know if you guys want me to use Webull more frequently. You can see these little blue E's right here. That's every time it reports earnings. Now, in the past, so in the last earnings, it reported and it fell. The earnings before that, it reported earnings and it fell down. All right, you can see that right there. So out of the last 4 earnings, the 4 blue E's that you see, 3 out of 4 of them, they fell down. This earning, you can see Q4 2020 was the only earnings in the last 4 earnings that has actually gone up when it reported earnings. If we go further back, we can actually see out of the last 1, 2, 3, 4, 5, 6 earnings, it's fell when it's reported every single time. So here it fell, here it fell after reported, here it fell after reported. Let's see how far. So now this earnings, it did go up after, but if we zoom in a little bit more, you can actually see that it did fall here to after earnings. So it reported earnings and then it fell. So that's 7 out of 8 earnings, it's actually fell. Now, this earnings, it did go up a little bit after earnings, and then it proceeded to fall pretty heavily. So if you can see, there's a little bit of a pattern with Netflix. Whenever it reports earnings, it goes down typically. And I think, in my personal opinion, I could be wrong, obviously, But if you look at all the times that even in the past, even if you go further back, here it reported earnings that fell, here it reported earnings that fell, here it reported earnings that fell. Here, this is going back all the way to like 2018. Okay, so with that being said, we already see a huge run up in the pricing in Netflix. So people are basically already pricing in the success of Squid Games, and they're already pricing in the success that Netflix has been having recently. So with these predetermined factors, people are almost buying the rumor and selling the news. It's almost one of those things with Netflix. So in my opinion, I think that Netflix will see around a 5% drop, maybe even as big as a 10% drop after earnings. Now, obviously, I could be wrong because Squid Games was reported at a $900 million valuation, which is absolutely bonkers. But from Netflix to go from $585 a share to $686 a share. So we'll say from 555 to around 630, which is a 13% increase, basically just on the success of Squid Games. And if you do a market cap, what's 16% of 280 billion? It's a lot more than 900 million. So a lot of that stuff's already being priced in. The success of Squid Games is already being priced in. So in my opinion, there's a good chance that we can see it retrace back down to around 580 and definitely below $600 in my opinion. So if you want to be a risky investor, you can definitely take out some puts. I'm personally not doing that. It's a little bit too risky for me, but there's a strong possibility that could happen. So you definitely want to be careful because we even see a lot of analysts are boosting price targets ahead of earnings. So that might be something to look out for. But typically when analysts boost their price targets, they're looking at like a 12-month lookout. They're not looking at exactly what it's going to be doing after earnings. You know, analysts typically don't predict like short-term movements like that. They typically are saying in the next 12 months, that he said his price target's going to be $720 per share. Netflix is one that goes up 10% and then down per 10% very rapidly. So we see it going up 10%, down 10% all the time. And over the last year, it's probably done it at least 12, like a dozen times. And it's even rallied 25% just from Squid Games, right? Here we'll also see Squid Game, the latest mega hit from Netflix, could be worth nearly $900 million for the streaming giant. According to an international document from the company, the 9-episode horror thriller has risen sharply in headlines since its debut on September 17th is when it came out, remember? So Netflix is only up really about 8% or so from September 17th when Netflix came out, and including ranks of number one in several countries, including the United States. The numbers, Netflix measures the success of the show as impact value, which combines data like how often a show is watched by new customers, existing customers, and cost, efficiency, and impact long-term viewership. Squid Game has generated about $891 million in impact value, making it a highly profitable series for the streaming giant, meaning that because people are talking about Squid Game in different countries, a lot of people are buying a Netflix membership just for Squid Games. So they're seeing a lot of their new customers, their new signups are actually going straight to Squid Game. About 132 million people have watched at least 2 minutes of Squid Game in the show's first 23 days, blowing past 82 million Netflix record set by Bridgerton, which is a domination in beating the record. Netflix also estimates that 89% of people who started the show watched at least 75 minutes more than one episode, and 66% of viewers, or 87 million people, have finished the series just in 23 days. That means subscribers have spent over 1.4 billion hours watching the show, which is more than double the total hours of second place, which is Bridgerton. The viewership figures could go a long way for Netflix, which reported its slowest pace of subscriber additions since 2013 in the first half of the year. In fact, the stock is up 7% since Squid Game was released on September 17th, and many analysts expect the show to boost Q3 earnings, which the company will release after the bell tomorrow. Squid Game has already been resulted in a bunch of other places, and others have risen their price targets on shares, while JP Morgan believes net subscriber ads will come in around 3.5 million for the quarter and 8.5 million for Q4, which would be an insane growth for Q4 as well. So Netflix is definitely a scary one to bet against. Squid Game is definitely a scary one to bet against. If you're doing a put option, there's a good chance that it could land, but I personally am not going to be betting against Squid Games, so it's up to you to do what you want. But if you're going to be buying for long term and if you want to get into Netflix, I think it's a great one to start dollar cost averaging in today. I put around, I think, what is it, like $5 or $10 a day every single day into Netflix in one of my Roth IRA accounts on M1 Finance. So that's what I personally do, and I'm not going to be trying to time the short-term movements on Netflix because it typically does go down after earnings, but Squid Game is an anomaly, and it can definitely push Netflix's stock price higher once they report earnings after the bell tomorrow. Now, as far as Tesla stock, it's nearing all-time highs, and the deliveries are all-time highs too, so it kind of matches with revenue and net income and everything too. In the last 3 months, we're up 38%. If you've been following this channel for a long time, we were buying under $650 per share, so congratulations on being up around 30% or more on Tesla just from watching this channel. We have all-time highs sitting around 883. So we're basically at the resistance of all-time highs. And the question is it going to bounce off the resistance and go back down to around 750 or below $800 per share? And I think there's a strong possibility that it's just not up only from here. We can definitely see a little bit of a correction on Tesla stock, so be prepared for that. I personally only have $1,600 in my Robinhood account and have about double that in some of my other accounts as well. We have a reoccurring buy every day of $25 going into Tesla, so nice and easy, averaging into the market. The PE ratio is extremely, extremely high. The market cap's high. The volume is high. Everything is absolutely high on this one. Tesla finally begins refresh Model X deliveries. So that's some good news. They're going to do a refresh on the Model X, and the Model X is one of their more expensive cars, so hopefully that will drive revenue a little bit as well. And let's keep it simple with Tesla. We don't have to read a bunch of articles to understand that Tesla is breaking numbers and breaking deliveries and doing all kinds of crazy stuff other than cars as well, like solar and stuff like that. You know, we're just going to keep it easy with Tesla and dollar cost average in. Follow my lead, $25 a day. If you can only do $10 a day, if you can only do $5 a day, that's absolutely fine. If you have fees on your brokerage, it's better to do monthly, dollar cost averaging in every single month. But if you have no fees on your brokerage, then doing it every single day to dollar cost average more effectively is totally fine as well. So again, if you have a lot of money in Tesla, let's say I had $10,000, for example, and it was a large percent of my portfolio, and I had like 22% portfolio diversity, I would probably ease that down to around 15 to 12% or even 10% portfolio diversity. Take some profits, especially if you're up over 30%. It's going to be easier for you to take some profits because that gives you an opportunity to buy more shares at around $700 per share or $750 per share. So I hope you guys did enjoy this video. Try to keep it simple, but try to do a deep dive at the same time because you definitely want to know where your hard-earned money is going and that it's in the right and safe place. So if you appreciate that content, smash a thumbs up on the video is all I ask. If you want to join my close friends list and see exactly what I'm buying, when I'm buying, how much I'm buying, then DM me on Instagram. I also have coaching programs. If you're a beginner and you want to learn the stock market and how I look for everything, I have video programs as well. I even have bundle packages for everything so you can get it all in one. And if you want a cryptocurrency update, make sure you go over to the Daily Cryptocurrency on Instagram. I'm posting a new IGTV video today. I'm going to be announcing the winner of the giveaway for the Wicked Bone NFT on the Sol blockchain on the Instagram TV video on the daily cryptocurrency on Instagram. So I hope you guys appreciate that video. Comment below what you want me to talk about in the next video, or what stock you want me to talk about in the next video, and I'll be answering the first couple comments for the first couple hours as well. All right, share this video with a friend if you think they'll find it helpful, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.